Good morning, members, and welcome everybody. Obviously, on the Saturday rainy morning, I appreciate you made it over here. So I really thankful, and I would expect this would be a very enriching thing. I had put some efforts in making the presentation. Obviously, we like to hear from you as well, from an input perspective. I would like to make it more interesting and more light-hearted, considering this being a Saturday, and obviously all the whole day we are actually into these professionals. As a professional, we have to be to the mark and professional, but obviously we intend to make this very light-hearted. Just to start on my given topic on the compliance and the certificates and the Companies Act. So there will be a flow of presentation. Obviously, we will not restrict to any flow of presentation. If you have any queries, any questions, or any discussion which you would like to have, definitely we would prefer you interrupt and we can have those discussions. Obviously, the intention is also to learn from you rather than just informing. So this is something I would prefer to have a two-way communication on this, and I would appreciate if you put your best foot and share your knowledge with us as well. Before we start, I would like to narrate one incident, a story from an epic, almost huge epic of Mahabharata. In Mahabharata, it teaches you about also compliances. I will just narrate the one here of Yudhishthira, the king of Pandavas. So the king of Pandavas, he was expected to be a truthful person, but he spoke one untruth. That is one untruth or half lie, you may say. When he was approached by Drona to confirm the death of his son Ashwathama, he did confirm that, but he meant it was Ashwathama, the elephant which his brother Bhima had killed. So consciously Yudhishthira knew that Ashwathama was the Drona was referring it to his son and not the elephant, but he mentioned the half truth. So though Drona was his guru as well as adversary, but he was on the conscious.
It's called Naroba Kunjuroba.
Naroba Kunjuroba, correct. It's a Naroba Kunjuroba. So he did consciously. The fact is, he did consciously mention. He distinctly mentioned the word that Ashwathama is dead, and indistinctly he added the word elephant after the name. So the consciously he knew Yudhishthira he was doing that. So the moral of the story is what we want to take it from this story is what happened after this truth. So he was truthful the whole life, but after that, what the one truth which we mentioned, the one half lie which we mentioned, till the time in the whole war of Kurukshetra, Yudhishthira's chariot was 4 feet above his earth, being he is a truthful person. But after this untruth, he came down to the ground. So the Yudhishthira which he had mentioned that okay, this is the high moral ground, but he has consciously done, and this poetic fall of his chariot to the ground is the moral ground which he has come down, which was high in the air. Obviously, and for that he had to also witness hell for a brief period. So saying that how we link this to the compliance, what we do over here. So Yudhishthira, with his all perseverance, he did mention the untruth. So he was under the potential win of the battle, and with the counsel of Krishna, he did mention, but he consciously told the untruth, the half lie, which we keep referring it to half lie. So this is also applicable to our compliance when we talk about compliance. So there is zero tolerance to compliance. So in our professional world, we get under the weight of the expectation from a client, the compliance cost involved in this, and also the counsels of the peer and the competitors, we try to compromise on the compliances. But even the half lie which Yudhishthira to face, even a similar backfall or pitfall in the professional in compliance, it's a pitfall from reputation perspective. It would be a pitfall from your civil law penalties. So the consequences are very high. So just to put the context here for this story was there's zero tolerance to the compliance which under the companies which we have to do. Thus, I've actually, we need not emphasize more on why the compliance is required, but obviously if these are the recent news which are around where these are cutouts from one of business papers where the MC, the regulator, has been very strict on the violations happening with the company's laws, the penalties which has been imposed, the amount of reputational damage to the company it has happened, that is also incredible, which we can't really measure that. So this is also, be it LinkedIn or Satya, if you see there are few fines on the LinkedIn, Satya Nadella, all the SBO, the new regulations coming in, all this, if they are not complied with, the regulator is not going to be easy on them. So we see there is ease on the regulations which is coming in by the regulator, but what we also see is the way stringent actions being taken against those who are non-compliant. So the message here wants to be there is zero tolerance on compliance. As a professional, it's expected from us also, be in the capacity of an auditor or as a management expert, we really need to be on top of these when this compliance comes in. So we don't want to be a part of this news article where our company or the company which we associated with are under this scanner of the implications which as a professional will be on you as well as the company which you associate. So we consider this as a compliance as a very top notch, as a very zero tolerance activity. Rather than activity, it's a process which need to be followed by every entity, and being a professional, it's our professional ethics to ensure that we are compliant by the law, especially the Companies Act, which is governing this whole compliance for the companies which we audit or in any other capacity which we associate with the companies. I don't think so. I need to more emphasis on why the compliance is required. I would move on to who are required to do the compliances. This data is from obviously the MCA website, the latest data. There are around more than 17 lakh active companies which are subject to these compliances. Right? So leave the dormant companies, the closed companies, the companies under liquidation, the more than 17 lakh companies is obviously all over India. Companies, which also include foreign companies registered in India. But this is where this is the whole gamut of companies which we are looking at, which are subject to compliances, and that's where we have lots of things to ponder for. Obviously, as a capacity of being a board of director, being in the committee, being in the audit committee, or being in the capacity of auditor, internal, external. It's something which is of a prima facie importance, and the importance is growing. Right? India becoming coming on the world stage. It's coming on the fifth as far as GDP is concerned. So people are looking at Indian companies, looking at the Indian financials. The FDIs are coming in. So this is where our financials and the utmost compliant the country is, the more beneficial from FDI perspective. Also, that is something which is looked very closely by the analyst, the Indian analyst as well as the foreign analyst, and it's from a chartered accountant perspective. I think we are in the sweet spot currently where we will be subject to scrutiny. Obviously, it is for good for us. And that's where it's required for us to be very specific, have a clear-cut approach on the things. There will be few ups and downs with respect to compliances, but we are required to have an informed decision whenever we advise our client or whenever we are in the position of taking a decision. So that is something which we should be very mindful of. So what need to be complied? So that's a question which we should be answering, right? So now the Companies Act is a huge act. There are 29 chapters, 470 sections, 7 schedules, and there are around 400 approximately rules which have been which governs the whole compliance structure. So we may not be able to focus on all the aspects of it, but just to understand how the things are, how the things we can look into a perspective. We should be aware of what from where the source of the compliance is. So this is the whole thing, from where the source of the compliance is. So the Companies Act is divided into 29 chapters. I have mentioned all the chapters here. So it's a flow from start to from the incorporation to the functioning till the winding up, the changes which is happening, the day-to-day functioning. Everything is covered in it's a life cycle of a company, right? From birth to the grave, everything is covered in the Companies Act. But just to make it more simpler, we can divide into few of the key aspects where we really focus based on a compliance things. Obviously, this is summarized way of looking at the Companies Acts and rules, but this is something which we should be aware, and we should in the day-to-day life we should be aware. We should have an eye for. Yes.
Sorry, just after this, will you share this slide?
Sure. Yeah. You need not note down. The slide is very elaborative. I will be sharing this slide. So I would appreciate your attention on this rather than making the notes. Obviously, the slides will be anyways available to you. Any thought, obviously, you can note down. If you willing, you please share the thought also with us, so that we also have that knowledge sharing session, which actually I expect that if there is something which we can gain as a collectively as a group, I think that will be more beneficial. So these companies, these are summarized into, as I mentioned, is from birth to the death of the company. Everything is covered in this. So these are main aspects of the Companies Act which we should be mindful of, very watchful of when we are associated with any company, be it private limited, be it listed company. All these things is something we should be well aware of what the Companies Act. Obviously, when we are actually interacting with the client or with the management of the company, this is something which we have to be aware, because we are as a chartered accountants, as a members, we are considered to be the torchbearer of this Companies Act. So that is it's a huge responsibility which we have with us. So we should know what is the source of this authority, and how do we do justice to the information which is available to us being an expert. So these are key compliances under the Companies Act, obviously starting from the incorporation and maintenance of the incorporation of the company. It starts from the maintenance of the register, post that the running of the company, which require the annual meetings. These are very specific things in the Companies Act mentioned which need to be complied with. So it will not be possible to put all the things over here, but there is something which we should be mindful where to go for in case if we are concerned, if we are engaged by a company on these matters, we should know where to look for. So it includes annual filings. It even mentioned about the board meetings.
So when you take us through the detailed understanding about the compliance, I would rather request you that add on something which is connected to the IPC also, because the companies which are in the CIP process has a certain specific requirements
Sure.
the compliance is there. I became insolvency professional at this
Yeah,
point.
so it wouldn't be possible to cover all this, but
much as
yeah,
possible.
as much. So we have selected a few current issues which we can go into a detail. I will come to the next line. I will so how this approach of this presentation is. Just to complete on these sides, obviously the related party discussions, related party transactions, which are there's a separate session during the day over the related party. So I will not be getting into detail of this. Obviously, corporate governance is the key to the whole company structure, which we'll be more emphasizing on. Dividend distributions, audit, these are the key fields where as in the capacity of the auditor, you have much more responsibilities compared to being a management, because this is expected to you be external auditors on these matters. Obviously, insider trading, corporate social responsibilities, dissolution and liquidation, where you mentioned IPC, all this forms part of the matters which are impacting the companies during his life cycle of a company. And obviously at the end, but the most important, the compliance reporting which is done on these matters. So how would be the how do we look at these compliance? Obviously it is not possible to cover the whole Companies Act in a 1.5 hour session. But the approach which we will be following is that how we will look at the forms, the forms which the regulator asks the companies to submit as a part of the compliance. The frequency of the forms will differ depending on the requirement at the stage which the company is. But it is the approach which we follow where we refer to the forms which the MC is required to be followed. Obviously there are some e-forms which is to be filed electronically. Also there are few physical forms which need to be filed with the regulator. So this approach will cover most of the things. We will give on the current issue. We will go into the detail if possible. But on this, there are few procedural things which we should know about the dates and the things which are more day-to-day matters. And there are few new changes which are happening in this field which you should be aware of. Is something which will be covering under the current issues. So now the compliance forms, the way in the earlier slide which we mentioned, there's a life cycle of the company. Similar are the forms which are been designed to ensure the compliances by the company. So these are abbreviations which are given to the forms. The form starts with INC, so it's for incorporation related documents. There are lots of forms. I will be covering those in the next slides. So they're pertaining to allotment. So these also follow the same cycle of the life cycle of a company. So there is nothing which is, so the whole flow is logical in this. So that's why the approach is followed, because this will give you an idea what are the checklist of a particular compliance which we should have and we should maintain. MCA do provide a checklist. Obviously this is made based on the checklist which is available on the regulator's website. They do help. They are also enable professionals to have this attitude of having this checklist and maintaining that we don't lose on to anything. So these forms have been divided. Obviously in the numerical thing is based on the abbreviations made or given to these forms. So coming on to the forms, these are a few of the list of the forms. Obviously in total there are 96 forms, so it will not be possible to cover all the forms. As I said, few of them will be very procedural things, but it can be divided into two logical things. One which are based on e-forms, which would be a submission which is required to be made to the regulator on a more routinely basis, and there are few declarations which as a professional in the capacity as a chartered accountant, in the capacity as an auditor or as a management consultant, which we have to provide to the regulator. So these are the few of the forms. So where INC starts, it pertains to all the incorporation related documents which was alluded in the earlier slide. So there are incorporation related documents which need to be at the time of incorporation of a company, depending on the type of the company. So there are very specific exemptions given for companies. That's why the classification of company becomes very important. On this point, I would like to mention the 1% company, which is the threshold of the ease of doing business initiative taken by the government, where there is an expansion of the limit of the, rather upward expansion of the limit of the classification of 1% company. So there are specific documents which are very minimum information which has been asked for a 1% company to be registered, so that this compliance, the number of compliance has been reduced for that 1% company. But though the compliance has been minimum, but the adherence to this is 100%. That is what is the expectation of the regulator. So apart from the incorporation documents, post the incorporation, obviously the incorporation document also includes the change in the nature of the liability from private limited to public limited. There on each and every stage of the change in the incorporation which has been done at the time of the formation of the company, you have to inform the regulator on the changes being made. So be it the change in the registered office of the company, because these are simple thing. There is a change in the registered office, even if suppose it's moved from one office to another office, and we tend to ignore this. Okay, it's in the same jurisdiction, why we should inform. but it is something we see there are penalties being levied on the companies for not informing, not timely informing on the change in the registration office as well. So these are very operational issues, but we should be very mindful because these small things do have the risk of reputational damage to your company, the company which you are associated with. So we should ensure that the whole incorporation things from any change which is happening in the basic registration information given to the regulator at the time of incorporation, we make sure that we have also informed on a timely basis the changes which have been made to this incorporation information. Post information comes the whole day-to-day shareholder capital, the limits of the shareholder capital, the few changes, thresholds happening based on the allotment which are being done. So it is more applicable more to private as well as public information, public companies. I would also like to mention the PAS 3, which gives the information of the allotment is being made by the company. And this is the document which is being referred by the analyst because this is a publicly document available on the MCA site. So all these documents are publicly available. So you are also subject to scrutiny of this document by the public as well. You can pay for and have a view of this document. So all this information will be a public information. So you would also like to be correct on these matters, though it may be small, but you should ensure that there is no such mention where you don't have clarity and you are actually mentioning something which may be very detrimental to the user of the information. So yeah, I was mentioning on the PAS 3, which is referred by auditor as well as external auditor as well as the analyst, the person who do due diligence. So it's a very key document which the company submits. Obviously, it should be submitted within as a specific time limit. But this is one of the document which is very closer to the control aspects of the target company, the one who is acquiring the company, because this is the information which gives about the owners of the ownership pertaining to the change in the ownership happening of the company. So this becomes a very critical document. The PAS 3 is referred to as return of allotment. Obviously, reduction of capital is also part of the ongoing process, though it would be at the time of exception, but it is something there are specified forms for that. The other main thing which the companies are concerned on, the charge which is created on the assets. So there are specific forms for the charge which has been created. So this is not only at the time of creation of the charge, but also at the satisfaction of the charge. If there any mortgage to your assets which has happened over the period on the companies, the whole details need to be submitted to the regulator. And these are the documents which are looked in by the financial institution. If the company is in the stage of raising money or funding, this becomes a critical document which gives the information of what the charge has been created on your assets of the company, how the company is functioning. So capital was one part of it. The charge is the another part of it from where the borrowings are coming in. Right? As you mentioned, going into the IBC, so is a next thing where your whole charge gets into detailed scrutiny by the administrator. So that's where it create a very important role from a perspective of the user of the information. So any changes happening in the charge created on the asset, even the satisfaction of the charges, it should be reported on a timely basis to the regulator. So this something is a very foremost in the wake of the current happenings around the regulator being very stringent on these things, especially where there is a borrowings being done from the financial institution, where there is a very stringent action obviously by the other regulators, be it RBI or be it SEBI. So there is something which is gaining importance in the current scenario. Moving on to the other set of forms, it refers to the directors related. So the board of directors are the key manager person in a company functioning, and the whole compliance with respect to directors becomes very important. So be it KYC pertaining to those directors, the appointments, the number of appointments he has in other companies, this becomes very critical, and it is mainly dependent on the disclosure which the director has been making to the company. So, there are many pitfalls which appears in the declaration which the directors make. Some are inadvertently, some are consciously, but that becomes a very critical in case the companies are listed. So in listed companies, the role of the director, the independent director, is gaining more and more importance. The independent director is now considered to be the main beacon bearer of the whole regulator from a standpoint of the decision in the management is concerned. He is a part of the board. So any decision made by a board, the independent director need in the position to evaluate in the objectively. He has to evaluate the things objectively, whether it's a detrimental to the business which they are concerned with. That's where the disclosure made by the directors, if there is a conflict of interest in the matter being discussed, it becomes very crucial. So right from the KYC of the directors, right from the interest related disclosure which they have to make, so these related forms need to be submitted with the regulator. This also includes the minutes which are being dealt with by the meetings which are considered to be important and need to be given to the regulator. So the whole governance structure is to bring in the transparency. And as I mentioned earlier, this is something which is available publicly to the person who actually look at the company. So the company, especially the private limited, public limited, which is limited by shares. So the owner's risk is limited to the capital, but those who associated with the company, they have more stake into that. And the government, the regulator, which has more stake into maintaining this the whole ecosystem of the companies and the functioning of the business, this becomes very critical. The ownership of the director becomes critical in the decisions which they are taking. So this is considered to be a crucial from management operations perspective, where directors do their disclosures in a timely manner, and the compliance and the Companies Act do mention on the compliance with respect to directors which they have to do. But the underlying of this is these are hard coded in the Companies Act rather than my rules. Most of the things are hard coded in the responsibilities of the directors are mentioned in the Companies Act. It's a principle based thing, but nothing detrimental to the business is something which they are part of a decision making. There is something which they have to disclose categorically in this by way of these forms. So on the foreign companies and the general liability companies, we have few forms which give the basic information which need to be regularly given to the regulator. So these are mostly the foreign companies whose branch has been registered in India. So there are few basic information which are required to be mentioned in this. So the other petitions to central government, these are the exceptional forms which normally once in the lifetime of entity you may face, but we should be mindful that there is something which anything which is happening around the governmental part of it or the governance part of it, we should be aware what declaration, what information, what compliance is required from the Companies Act point of view. So this is not an exhaustive list. It covers most of the 80-90% of the compliances which is required in the Companies Act and the rules and in the day-to-day functioning. So it will be covering most of the things. So these are a few of the declarations also which required to be made by as a chartered accountant or cost accountant or company secretary are required to make a declaration at the time of registration, at the time of commencement. All these services are something as a professional we are bound to make. So we should ensure this the declaration whenever we give the declaration. So these forms mention about the declaration, the format of the declaration. But the crux behind this declaration is that you have abided by the acts or the sections of the Companies Act, the rules and the regulations which are governing the whole Companies Act. So you should ensure that this declaration are made with a proper informed decision has been taken, and then we have given these declarations. So and the others are the certificates which are in the form of INC 33, 34, 35, where we get the memorandum and the articles of association which which is the governing rule book for the companies to be rule book for the companies functioning, as well as the vision of the companies which are incorporated in these critical documents. On the DPT3 perspective, the return of deposits, which even needs to be audited by the external auditor in case of the companies that are accepting public deposits. The whole things flow from the fact that you are taking money from the public in a fiduciary capacity. You are expected to be more diligent on the way the money has been procured from the depositors, and how are the compliances made with respect to deposits which are being accepted from the public, and it is subject to audit. So there is a specific audit which need to be done in detail to ensure that each and every pie of the money collected by the companies are actually accounted for and been used for the purpose which they are intended to be. So the end use of these money becomes very critical, and there's more professional judgment also involved in issuing this DPT3. So we should ensure that we look at the terms and the conditions under which the money has been solicited from the publics to be a part of our audit. Though it may be a risk based, but it is expected to have a due diligence to the last penny of the money collected from the public. The AOC refers to all these annual compliances with respect to submission of financial statements. Now the season is of submitting the financials, the AGM happening. So the time limits where we need to submit the annual financial statement, the time limits are very stringent. There is no waiver normally, except after COVID there are no waivers coming in. The due dates which need to be followed to ensure that we submit this on a timely manner. So these are annual compliances, which includes our audited financial statements, the management report, the director's report, which need to be annually submitted to the companies as a part of their annual submissions. I would also like to take your attention onto the ADT, the ADT 123, which pertains to the auditors, the appointment of the auditors. So as an external auditor, you also have the responsibility of ensuring that this compliance has been done by you as well as the company when your appointment has been made, or even when the resignation has been done. So the timely communication of the resignation is also very important, especially now in the cases where we are seeing the lots of resignations happening on the listed company. So now resignations without reasons are something are very categorically questioned by the regulator. Why this resignation has been made? So now auditor is not allowed to run away from the decision or reporting which has to be done by just resigning from it. He has to give the reason why he is resigning, right? So now even the resignation of the auditor has a reputational impact on the stature of the company. So this listed companies, if there is a news, there is a resignation which is coming in the listed company, we can see the share market even reacting to these news. So that is how the importance of external auditor is there in this whole ecosystem of compliances. So we should ensure that the communication of this resignation and the appointment is done on a timely basis. It's the auditor responsibility to file the ADT3 in case where there is a resignation before the expiry of the normal appointment term. I earlier mentioned on the director's KYC requirements, the importance of the director. So there are a few e-forms which pertains to the filing the KYC of the directors and the DIN, the director's identification number, which is a very key for tracking the whole directorship which the director has, and this also comes as a disclosure in your financial statement. So this becomes very critical that the DIN is mentioned properly, and all your directors have that DIN number, because that is the tracking number which is used for the directorship, especially when the directors have multiple directorship, especially the independent director. We should be aware how many independent directorship he holds, and the disclosure needs to be given in the meetings as well as in the financial statement. So this becomes very critical information from a company's perspective which should be complied with. MSME, I was made a special mention of the MSME. Obviously, the government is also having more benefits offered to MSME, rather apart from the 45 days limit, 45 days credit, the maximum 45 days credit which has been given to MSME as a law. So here the companies, how do they comply with the MSME is something which they need to, and this is getting bigger and bigger. Obviously, the government being focusing on the MSME, and the more and more MSME the companies dealing with is the more compliance. It becomes a laborious sometimes, especially the bigger organization. It becomes laborious to have this compliance to be done for MSME, but we don't have a choice on the compliance of this, because it's something which is very closely monitored by the regulator when it's concerned about the small and medium scale industries. So we should ensure that if we have any MSME, the declaration, the process of taking declaration of the MSME, that becomes very critical. We are really not aware whether the company is dealing with MSME or not. But what evidences we have on the file, that becomes very critical. So that's why getting a declaration from the MSME, be a small company or bigger company, obviously we will be interacting with the MSME, and we should ensure that we comply with the MSME norms. And obviously this form do mention about the MSME compliances which you need to do. So we should see to that we have been complying with the MSME, especially in the current context, and the increased vigilance by the regulator on these aspects. No, this form has been more than, I think it's more than 2-3 years old now, but the vigilance has increased, mainly because now the focus, if you see budget 2024, the outlay towards MSME is being given is increasing, and whether the things are flowing to the MSME or not, that is something which is because they are not able to generate the employment. So the whole focus of the government is on to ensuring that the compliance for this is zero. There is no tolerance on the non-compliance of this matter. That's why it becomes very critical, and it's increasingly become critical as the budget 2024 has given more allocation to the MSME. So it's happening. So it's more money given for the benefits of MSME. We are dependent on generation of employment for MSME. The importance of MSME has become very critical. That's where this compliance has more vigilance from the regulator.
This is important because this is also disclosing the financial statement.
Exactly. Yeah. So similar financial statements also.
Recently they have introduced a new form.
That's why I thought.
So there are changes. So there are changes which are happening. So all these forms keep evolving actually. So it will at points. So that's the reason why we should actually visit the MCA website to see whether it's all the changes are not at a point of time. It keeps on changing, right? Post budget there will be more few changes which will be coming into the disclosure which need to be made. So and so far disclosure in the financials are concerned, obviously we have standards which give the specific, the schedule 3 which will be covered especially in the next lecture, where we do have a disclosure which need to be made for this MSME. So that the forms keeps evolving. Not only about this form, every form will keep evolving. So we should be on top of it and we are updated. So actually I've covered few elements how to ensure this compliance. There's a few 7 elements which we should do. One of the element is to be updated on these matters, because at this point of time X would be the requirement. Tomorrow the requirement might change. So these are few of the physical forms, though most of the forms have been in electronic form. There are few physical forms still prevalent. So over the time these might also get in the digital form. But there are few declaration made at the time of incorporation which are still in the physical form. These are mainly the certificate incorporation which we get. So this is something which still gets in a hard copy, which we need to maintain and to be preserved as a document. And as an external auditor, you are also subject to check these documents, especially the incorporation documents, the documents pertaining to the incorporation, plus pertaining to those changes made in the post incorporation. So most of the things are in physical form. So it's a matter of time when all these will get into a digital form. But here it also includes the minutes of the meeting which need to be. If you see MTT 11, 12, and this talks about the meetings which happen and the minutes which are noted at the time of AGM. So these are also these actually the whole governance of a company is recorded through minutes of the meeting. So that's where the whole focus on maintaining of the minutes, the maintaining of the register is from this aspect that you look into, you have as an external, as a management concern, you know where to look for the how the company is functioning. That is where you go to the minutes of the company where we actually look. So documenting of these minutes, the critical minutes, the scrutinizer reports to the chairman which goes, these are also subject to compliances form and MCA which need to be submitted. So there apart from these, apart from the daily, there are a few of the items pertaining to the winding of the company, the solvency related, the solvency things. At the time of the winding of the company, it comes at a point when there's nothing but to close down the company and start winding up. There are a few more specific forms for winding, most often in physical forms and in the formats, where the IBC related matters which Madam mentioned. So this becomes, all these winding up formalities become critical from a perspective of Companies Act point of view. But once it goes to the IBC, when it goes to the administrator, there are a few other requirements which will be governed by the other acts which need to be complied with. But so far as the winding up procedure is concerned, it will be governed by the Companies Act, and these are the minimum form which need to be submitted. So obviously winding up would be a stage after the insolvency has been declared. There are quite stages which happens in the winding up. It is a process. It's not at a point of time where the compliance is required till the last penny has been paid back to the creditors or paid back to the investors. The winding up. So that's why the first slide which I showed you is still there are dormant companies. Still there are companies with closed companies. They're still active. They're still in the register because the whole winding up process has become a very, and there's no professional who are actually helping in getting this cleared. That's where the whole professional gap is in the winding aspects of the company. So that is something which going ahead might become one of the key matter of our professional practice, considering now IBC is more restricted to the bigger rather than the bigger insolvent debtors, but obviously it is also applicable to the smaller, and it will, and unlike the other developed and matured economies, this winding up formalities, it's one of the sign of a matured economy. When you have this winding up, if a company can wind up early, that is the indication of how developed and how matured your economy is. Because it's okay to fail, right? It's okay to fail, but it doesn't mean that you create a company to just carry on this company. The winding up formalities as in the mature economy, it will gain more importance, and it's a time when we flush out all these inactive dormant companies. So a few changes made in the report as well to identify which are the dormant companies, which are the stuck off companies. There are few companies which are stuck off by the regulator themselves, which are in the dormant stage. So all these gains importance when actually the economy becomes mature, and that's a easy way of exiting the whole formation of the company. So that these are the three specific mentions on the compliances with respect to the CSR and the NAFRA. CSR obviously the corporate social responsibility, and there are few announcements in the upcoming budget as well on the how to utilize the CSR, where they can use it for intention. This is the most recent update which has come in the 24 budget. But the CSR responsibility is something which has an increased regulatory scrutiny, mainly because of it's more about the voluntary service which is the company is doing. Obviously, it is expected from the profitable company to be done, but the information need to be submitted in a timely manner. The compliances of the CSR provision, which forms part of the Act itself, and also the financial statement disclosure also, which need to be made from the CSR perspective. So it becomes the primary focus, not only from auditor perspective, but also from as a part of a management consult to the company. It becomes very critical that that we do the calculation ourselves. So it's not a, so the calculation is one part of it, but the intent and the deployment of the money which is happening through CSR is something which auditors also look at into it, and as a management consultant you should be on top of it at what is allowed as a CSR and what is not. And and then the things are evolving. So as I mentioned, even in the recent budget, there are changes where interns, the money can be used for internships, generating employment. So there's something, it's very subjective, it's highly judgmental, what type of expenditure can be done into CSR. So that's where your professional skepticism should be used when you actually when you actually need to ensure the compliances of this CSR. And last but not the least, the NAFRA, which has the authority which is the now supervising, which has been taking disciplinary actions and which is very active now. So now it has been active. There are all the firms which are subjected to the scrutiny of NAFRA. Big six have already been through the inspections. There are one set of reports also flowing to these firms. And it is getting drilled down on the firms below that. So the whole NAFRA, obviously from a professional perspective, it becomes it's become a watchdog. It has even the court has now given a jurisdiction to NAFRA to govern the disciplinary action against the chartered accountant in the capacity of as a capacity of auditor, as a capacity of management consultant. Both are concerned. It's getting so the whole ICA, earlier it was driven by ICAI, but now it's more driven by NAFRA, and this tussle has become between NAFRA and ICAI, which has made both of them very vigilant on the misconduct which is done by the chartered accountants. So this become very close to now. Yeah.
CSR, I have one point. Can I ask?
Yeah, please.
CSR, suppose a company makes a payment to the trust, who is registered trust for CSR purpose. Says company has given the money in the January 24. The trust has to utilize before 31st March, or the company is compliant with once it is given a fund in the January only.
So the money, if it is transferred from your account within the due date to the trust, it is considered. So you can't expect the trust also to incur the expenditure before the end. So normally your payment made to the trust is considered to be an CSR.
Somewhere in this FAQ on the portal, it says the trust needs to spend this money, but it doesn't seem logical, because trust has it can't spend within 2-3 months whenever they.
Correct. So that there are issues coming on this, because it is practically not possible for them, because most of the profitability comes, and when you have cash flow, then you transfer the money to the trust as a mere. So the whole idea behind was that it should not be just that there should be spirit in the expenditure which you are making, rather than just ticking in the box. You are transferring on the last day of this and then expecting it to be trust, and obviously the independence of the trust is also a concern. So the whole scrutiny, rather FAQ, is more from the perspective of the things happening around the trust. Trust as the function of the trust is itself under scrutiny, whether the money has been utilized for the purpose intended. So that's where so you need to have a due diligence to see actually the deployment of the fund to the right. So most of them, what they are doing, they are themselves, rather than giving it to the trust, they are themselves making this expenditure as a way out. But obviously this may not be. So
Small or mid-sized companies, they don't have their own trust and they genuinely spend. So after AGM 30th September, they start giving fund to the trust. So it is a span of 3-4 months they give all money. Now the trust is also a good trust, all complied with, but they are unable to spend all money on the education or relief to a poor, and some money is not spent, whatever we have given. Now the trust is coming to the auditor for giving this certificate of ad utilization. So we say this, the auditor says, okay, out of 10 lakhs, only 8 lakhs utilized, 2 lakhs trust is with trust, but is not utilized. The auditor of the company, whether he has to see that this company is compliant with the CSR compliance, or 2 lakh is not spent by the trust, is also a default of the company, because once I give a money company.
Yeah, once it is out of your control, when is it given? So here the professional judgment of the auditor also comes in place. So once it is out of your control, so there is no such condition attached to it that there will be a recoup of the money made, then you can believe that it is out of control, then it's something which is given to the trust. So you can't, if you have control on the trust, then it will, the purpose itself will get defeated. right? So obviously it is expected that a trust is also independent, functioning independent. If you start dictating you have to spend money like this, actually the whole purpose gets defeated. So when issuing the certificate, what's the professional skepticism should be applied by the auditor or the who is signing the certificate is whether he has a control over the money which has been spent. So there are few smaller trusts where there is a money trail which comes back to your company. So there is something which the auditor should be mindful of while giving this end utilization. So this is applicable to CSR. It is also applicable to the deposits which we accept. So there is no such there should not be such leakage of the revenue, which is the intention of this. And the spirit of the CSR should be upheld. So that's where the professional skepticism comes, rather than the procedural whether the trust has actually made the expenditure or not, because still it's quite possible, which we will not be able to verify, the trust should have actually incurred the expenditure but not have actually paid it. That is also one of the possibility. Normally the trust have a big campaigns for education and all where they incur the expenditure, but the settlement happens at a later date. So that is something which will be very procedural thing, but to answer your question, it will be more on the judgment when you actually issuing the certificate of the end utilization.
One thing is the accumulation thing the trust has, that they can accumulate certain part of the donations they have received. So it's still the trust, right? Their option is still available.
Yeah, it will. Yeah, so there is no change in the trust. The trusts are governed by the Trust Act, so they are not governed by the Companies Act. So you can't, because of CSR is not required, and you unless until there is a condition attached to by the donor. That's where actually I was coming. If there is a condition attached to the donor that you have to utilize, obviously the generic conditions would be in align with the vision of the trust. But the conditions condition attached to it, that it should be incurred in a particular time period. There is something which you have to look in. Even the trust has to abide by that. That's where. So if such conditions are attached, then you should ensure that the money has been spent in. If it is open-ended, if it is a part of a general corpus rather than a specific corpus, to be specific, then it will be not be considered as a part of which he has to incur. So it will be for specific purpose. It should be for specific. If it is general, there will be not. Obviously, from tax angle, the trust has to incur, as it will have to anyways pay tax on that. So that is a separate part of it. From a CSR perspective, the condition attached to it, you should ensure that the trust, the judgment is involved in actually assessing whether end utilization is been as per the spirit of the requirement of CSR or not.
Is this a mandatory requirement or it's voluntary contribution?
CSR is mandatory. Now it has become mandatory if you are profit making. Yeah, you can carry it forward, but it's become a mandatory.
Provision needs to be made for this.
Provision needs to be made forward.
Sir, can you explain how into the assignments of management consultancy NFRA can investigate? Mandate for NFRA is given in section 132(4) of the Companies Act.
Correct.
Right, and there it is only auditing.
So from audit, so now auditor when the whole now currently audit firms, not only audit firms are also in the mandate of NAFRA. And when audit firms come, the consultancy services provided by the audit firm as a management consultant are also part of it, to ensure there is no non-audit service given to the audit clients. So in that case, even if a non-audit service is given to your audit clients, it also comes under purview. So now it's the ambit. See, the logical extension of this would be your non-audit service given by the firms, and same will be applicable. If you are, suppose as an auditor you are giving audit as well as non-audit service to a client, so SLF is a conflict of interest. So that is where the recent reports which have been come is the whole focus is on the acceptance of the client, how you are accepting the clients, how you are influencing the client, how you are soliciting the business from the client. Obviously, solicitation is not allowed as a professional, but that's where the key is, whether there are any elements to it. That's where your position as a management consultant to a company, whether it's influencing your decision to become a part to getting the appointment as an auditor. So in that angle, so the linkages are very logical, extensions are very, it could go reach to any position. But currently now they are focusing on the audit firms and the audit, especially the big audit firms which are getting under this mandate. Obviously, when they are looking at the audit firm, they are also looking at the non-audit service which is given by the firm. So
Recently, there was a news item whereby NFRA imposed huge penalties on a chartered accountant for having certified deduction under section 80JJAA of the Income Tax Act. So my perplexity is that how they are fitting into Income Tax Act.
Yeah, so
It's only a certification assignment, you know.
so you can say that they are governing all the chartered accountants. If anything chartered accountant is doing, is subject to NAFRA. That we have to look at. If you go by is only referring to Companies Act, no. So even tax audit will come under that. Your appointment has been done tax audit. So they are governing the chartered accountants. Though the authority is flowing from Companies Act, but they are actually regulating whatever conduct of a chartered accountant. So you are acting, if a chartered accountant is acting in any capacity, it will be subject to scrutiny by NAFRA. So
Interesting. I think in this NFRA 2 form, that even if your partnership composition changes,
you have to inform.
It's following basically the US PCOB rules.
So this everything is coming from PCOB. The matured countries, economies have this already in place. So there is nothing new which is coming in. But obviously the how implementation, how it happens, that will also be yet to see. So now currently the whole, just to share something with you, obviously that there are a few other sections, other speakers also coming after this, which would be alluding on these aspects, I suppose, because the inspection and this is a matter which has been covered as a separate topic. But the whole thing coming up, the discussion with NAFRA happening of these firms is that they are looking for how objectively you are doing the audit. That is forcing even the audit firms to separate their advisory with the audit. One of the big four also tried to separate its services. Now big fours are actually focusing on advisory and less on audit because of these things. So the whole conflict of interest. So this is happening for a long now. There's a conflict of interest in between advisory and how objectively you are doing the audit. So all these are under which has been coming into the focus. And from a corporate governance perspective, this is a very important aspect of governance, that how objectively, since many investors, analysts, stakeholders are dependent on the auditors for the submission and they are the field on the ground. So NAFRA is not going to come onto the ground and see what exactly is doing, but obviously what are the procedures being followed by the auditor, what are the steps he has taken, whether he is following, whether he is going by the rule book, or how it is managing. Obviously there are instances of happening, be it the GTB Bank earlier, the Satyam. There's a precedence of the things happening around this, and auditor has been reprimanded. Obviously, the big auditor has been reprimanded for all these things. So to avoid these lapses, to have more accountability accountability to the public and to the professional ethics and the conduct which you uphold. This is something is a normal fallout which was bound to happen, as sir really did mention. There is nothing which is happening in the mature economies, and there is something which will come, and over the period more. Also there is a news item which mentions that NAFRA is going to increase their staff strength so that they can have more coverage. So there is something which you can expect that is going to happen in the coming future. There is something which you, as an auditor, as a chartered accountant, is something we should also look at how the things are developing around this. Because there is something which is even a small auditor, as I mentioned, is being subject to scrutiny, right? So, and this is also one of the things which we can use to increase the fees. That is what that we are being audited by NAFRA. So there is more compliance. Also. There is something which we also mentioned when we say why we want more fee. If you have a fee increase, is something which we also mentioned. We are also subject to audit. So that adds credibility to your work as well. Right? So that is something which even as a professional you should be happy to this change happening, because it adds credibility to your report, it adds credibility to your science. So that is something which actually you should look forward. The more the scrutiny, the more better for us as a professional. That is actually, this is my personal opinion, but actually we should take it more positively. And the whole session on this compliance actually is to make this that there is a credibility in the work we do, the credibility in the documents which we are signing. That's where so when everybody is dependent on us, we become the beacon bearer for this compliance, and that is something which we should take as a matter of pride. That there is more scrutiny happening, the more people looking at it, the more people dependent on the things happening around this. So there is something which you should be very mindful of when you actually ensure this compliance has been done with. I guess I am on time now. So these were on the compliance. There are a few important due dates. Obviously, this is not the exhaustive list, but this is something which we should be mindful of in their day-to-day functioning. Obviously, there are some annual submissions coming in. The time for annual AGMs being happening around, and the submissions being to be made to the regulator. So this is something which should be of a top of mind. Rather, this is a charter, due date charter, which you should be aware. The only small point I like to mention over here. When we actually, when the due date mentioned about 30 days, you go literally by the 30 days. You should not go by 30 days means 1 month. That's where you miss out 1 day. Now, there are cases where there were penalties levied because of this delay, and actually we should be mindful. Rather, we should not wait till the last date. That is what I can say on this. But these are some of the important due dates we should be mindful of from the compliance perspective. So the forms which earlier mentioned, a few will be in the form of the certificates, which would be there will be the underlying certificate which would be required to be given to the Companies Act. So this is not a exhaustive list. This is an illustrative list where the chartered accountant can issue certificates right from the incorporation formation, from the commencement of the business till the whole functioning, the audit, the net worth certificate is something where as a chartered accountant you can give service to the client, and that's where also you should ensure that we are well aware of the Companies Acts and the related schedules and the related disclosure whenever we issue these certificates. So these are very generic certificates, and there could be more certificates based on the relationship which we have with management. As I mentioned, chartered accountants are looked as a professional who will help them in ensuring this compliance. So they look forward towards each of us that they will help you in ensuring the compliance, and the whole NAFRA and everything coming in actually is adding credibility to our work, and that's where we should actually make sure that we make a point that we are the one who should be we should be turned up to ensure the compliance. And when issue of certificate with respect to Companies Act is concerned is something which we should project as an expert in this field. Apart from the other certificate as DPT3 which I mentioned earlier in the presentation, also in case of amalgamation, merger, any complex transactions happening, chartered accountant has a role to play, because all this flow from the Companies Act, from the company's rules, the schedules which we mentioned, everything is flowing from this. So that is something where your expert opinion will come handy, and when the certification comes, you know where to look for the guidance. It comes from the Companies Act. That is where that's the Bible for us, for a company, from a company's and from you. But when I refer Companies Act, I do refer to the schedules of the Companies Act as well as the rules, which are approximately 400 rules. So it will not be possible to specialize on each and every aspect of it, but given a chance that you're working on a specific, obviously you should know where to look for, and that's where the whole idea of having these put forward to you. So it will not be possible for us to discuss each and every, but I want you to enable to where to look for. The MCA website, as I mentioned, the e-forms, the form is one of the checklists which you can have to your disposal. But said that every event, there are a few event-based certification and compliances which need to be done. Amalgamation and merger is one part of it. So that's where you should be mindful. If they are event-based, it may be not your routine one, but there are the things which will be happening around this, so you know where to look, and that's where your certification has that credibility and the comfort which is required by the regulator or the other stakeholders which are required for this purpose. So I will quickly run through few of the current issues which are, I will just run through. I think I am running out of the time, but we'll try to cover these issues. Obviously, the recent budget will happen on 23rd July on that by the new government. So obviously the emphasis on ease of doing business, which obviously turn out to be ease of compliance as well, how they're looking at it, ensuring the compliance of the thing. So the few, obviously the whole intention is to enhance the corporate governance and increase the credibility of the company's financial statements. So that is where the few of the things, few of the changes made to enable that we ensure the compliances. Obviously, first thing with the small companies, they have increased the limit to 4 crore and 40 crore turnover, which really is a great help, because small company, as I mentioned earlier, the fewer compliances to be made, and it's a step towards ease of doing business, which is expected by the government. Obviously, the mergers will be are getting fast track. There's a decriminalization. This is very important. There's a decriminalization of the offences. So when I mentioned decriminalization, that's where our Companies Act 2013, and earlier it has borrowed from Companies Act 1956, and which has been borrowed from the erstwhile companies. So there are many criminal offences under a few of the offences, which other major economies may not have. So what it is doing nothing but is clogging the whole judiciary system. So that's where the decriminalization will help, that these are handled by the adjudicating authority and not the judiciary authority. That's fasten the process. So there are a few of the appeals cases which will be scratched off if they are above or below limit. So there is something which is being done. I think you should be very mindful of this. If any of your clients have these such cases pending, if it's below the threshold limit, I think that there is something which they can get scratched off in this wake of the ease of doing business initiative being taken by the government. Obviously, there are some zero fee of incorporation, so this is more helping to the smaller companies to have the incorporation done very swiftly.
So when we say that it can be handled through an adjudication process, so it will be by NCLT or RD?
No. So here adjudication, it will be more about the executive people. So it will be more of the officer. It will not go to NCLT. So it will become a judiciary. If once it goes to NCLT, it will be judiciary. So it will be more handled at the officer level. So that's where how it's so the whole process of the courts will be not well. The end of the courts, that is what the intention is.
NCLT is not a judiciary. NCLT has an adjudicating authority.
So it will be.
Judicial power.
It's a quasi-judicial power. So the intention of it is not to go to a tribunal, but to the executing person to. So that's what the intention is, to fasten the process, right? There are lots of the cases pending with tribunal as well. So that is something which the intention is to that these things get clear as early as possible. This is the wholly to enhance the corporate governance, which is the intention of the budget. And the last piece on the centralization of the whole thing. So the centralization of the processing of the registration, the centralization of the forms submitted, the e-forms which I mentioned, is all the straight through forms where there is no approval required. It will directly process centrally, and the technology coming in, everything will be processed at a faster pace. So where the field offices are required, this will be minimized. So there is more transparency into the functioning. So this is more from procedural perspective. We should have an eye on this, because there are a few things which will make our life easy, especially when you as a concern to the company, this is something will become very handy in ensuring the compliances. The few current issues I will just push. Actually, this is something which is not talked about on the audit trail, which should be maintained in the accounting system. Actually, if I am not mistaken, this was also covered in the last 2 years. So I will not spend much time, but it is something which is being a focus of the compliance which is happening, which every auditor should ensure that there is an audit trail. Even from a management side, you should ensure there is an audit trail maintained for the accounting system which is being followed, or from which the financial statements have been prepared. This is the new regulation which is coming in, nothing to do but on this is the new regulation 2024 which is coming in, where there is a permissible stock exchange. This will help the unlisted companies to list. It is mainly specifically coming from the GIFT. There is an exchange formed in the GIFT. So this is something which will help enable the unlisted companies to have their shares listed, and this is more from the GIFT City. Now GIFT City, the India International Exchange and the NSE International Exchange have been the permitted stock exchange for getting listed, and the India International Exchange is actually situated in the GIFT City. It is more about the push which is given for GIFT City and the listing of the shares in the GIFT City. The significant beneficial owner has also been a talk of the town recently, mostly because of the layering and obviously the regulator scrutiny happening around this. There are a few penalties also been issued for non-compliance of this. So there mainly in this in case a company has a complex structure, this becomes very complicated to identify who is the actually single beneficial owner. So there are things which we should be aware, and we should be this requires professional judgment, because this becomes a very critical from your risk assessment point of view from a company's perspective. So this is something also looked in by the NAFRA, how you are actually identifying the single beneficial owner. That's where the point comes when you actually audit and non-audit services being considered, who is actually the beneficiary owner, that is which is being considered. So there are multiple layers in the company, making the structure complex. Identifying the single beneficial owner becomes very difficult. And this is not a this involves highly judgmental in nature, because it also talks about significant influence and control. It's not about just a shareholding threshold which is being considered as a benchmark, rather as a test for significant beneficial owner. It is more how we are able to influence the. So it brings in the bracket the whole HUF, the holdings which you are through HUF, the other things also comes into this in the form of trust. So how you are able to exert influence or control on the company, that is something will be termed as a significant beneficial owner. And this has been the talk of the town. Being a listed company or a small company is something which is the matter of focus. Obviously, we have to make a declaration on Ben 1 and Ben 2, the two forms which has been required to be given to the regulator, indicating who is the significant beneficial owner in this case. Last but not the least is the fraud reporting. From an auditor perspective, the fraud reporting which need to be done. This flows from the circular which NAFRA had issued, and there was a difference between how the auditor used to report the frauds earlier and how they have to report it post that. So currently the practice was to report the fraud which comes to the auditor's mind during the process of the audit. So it was not, if the company identified the fraud, it was not obligatory for the auditor to report. But this NAFRA circular to this has changed the whole scenario, and it is expected from an auditor to report any fraud, even if it is not identified by the statutory auditors, to be reported to the government. So that is something which is a very change. So that there is a dichotomy between the guidance note in this aspect, the SA 240 which mentions, and the NAFRA circular. But NAFRA more now a statutory authority set up by the Act. It's more prevalent now, but obviously there is a dichotomy which to be but the underlying thing is you have to report the fraud above 1 crore even if it is not identified by the auditor. So that is where the whole crux is. So actually the whole background for this being is more from that there was lack of reporting done on the fraud to the MCA. So that's where the trigger this circular. This is more specific, and this have an obligation for us to, as in the capacity of statutory auditor, to report this fraud happening in the company. Yeah, just I think I tried to cover most of the things possible. Obviously, it's a process. The compliance will be a process. It will not be a point of time that in the one lecture that everybody is on top of it. Obviously, it keeps the learning keeps happening. So normally there are tools available in the market which helps in the compliance. There are cloud-based tools in multiple laws. Compliance Companies Act is one of the things. Obviously, being the voluminous in nature and very heart of the company's formation till the functioning of those, and there are minute details. So what we suggest normally is to have this compliance framework in place of a company, and a few key elements. Nothing innovative, but it's something as a part of a process which you should have. That you should have the 7 elements when you actually design a compliance framework, or when actually you talk to a client. You need to have this compliance elements which covers obviously the policy, procedures, the training and education, the effective communication, the monitoring of those things. It's a typical process in a firm, but which is the most neglected in a smaller setup, and it is highly focused in case of a bigger setup. So that is how the dichotomy is. But nevertheless, these are the elements which will be common for a company to have. So it's worth mentioning to the clients in any capacity which we deal with them to have this compliance framework and make sure that they have these 7 elements. So the whole thing flows from the process, and we should have a process in place to ensure that we have this compliances. So I highly recommend having a compliance framework to ensure this 100% compliance, because I mentioned in the start of the presentation there is zero tolerance towards this non-compliance, and as a professional we are in the position to ensure that there is no such non-compliances, and whatever call or whatever things we are doing, or it's conscious and informed decision is being taken on these matters. So that's how I end my presentation on this note. If you have any questions or any discussions, I think I overshoot the time, but I think it's still, I have some minutes, I don't have it, but in case you have any questions, I will be sharing this presentation. All these views expressed are personal in nature, in person capacity. Obviously, nobody is a disclaimer which I would like to make, and I really thank for your patient hearing. Thank you.